What's up, y'all? Traders, good morning. All right. Good morning, good morning, good morning. What's up, friends? Get ready to get started. 2 minutes till market opens. I need to actually come in here and remake some things on my stream. Good to see y'all. Let's get ready to go. What's up, YouTube? What's up, chat? You know the drill. Smash that like button. Everybody on Zoom over here in the private call. Same time, no delay. Welcome to the stream. All right. That retrace today would be kind of nice. All right. All right. Let's get our liquidity maps coming through. Okay, right out the door. All right. We got some longs right out the door here. Let's see, we got open setup. Liquidity maps coming through here. Oh, S&P hedge break in the bull zone as well. Oh, wow. Okay, so it's the same setup as yesterday, the exact same setup. You can see that? Oh, we hate days like this. All right, same exact setup as yesterday, so nothing different. What's up? Good morning, you guys. Okay, so let me get my drawing tool here. Same setup as yesterday. I always take the bet that we bet here, but then there's the resistance there. We always have that if the DD ratio is good. We might fly to 552 today. And again, it might be the same. So if we get the same setup twice in a row, is this the setup that falls and crashes? That's the problem. Nasdaq might be in a similar boat here. Let's look at QQQ. So same exact setup. You guys see that? That's the same thing we had yesterday. Exactly the same. All right, take a read of what we have here. QQQ already starting below hedge, already resisting hedge. Mean reversion short up. I always look to take longs at hedge pressure, so that's pretty good. Let's come up. Let's see. The resilience is less. I mean, DD's right at half, so it's kind of a. Okay. It actually doesn't look too terribly bad. Okay, SPY. Problem is the same exact setup as yesterday, right? Do I take the bet on the hedge break with the small trade and we hit that? That's a possible problem. And then maybe we break into that. I don't know. Let's take a couple of micros on this one. Why the hell not? Let's take it. The problem being there's not a lot of room. You have the resistance to the bear zone. That's always a problem. How do we do this? Is that hedge pressure? Typically there's resistance here, but I don't ever usually short that leg right here. I usually bet that it breaks. This is eval, yeah. I started trading on ETF. Those will be new. All right, so what I'm looking for, let's take a look at the futures here. Was it this last night that we were opening below? We had some interesting moves this morning. So I'm looking for the 555. I got some 555 calls on S&P for September 11th for next Wednesday, just to fill the gap from yesterday. Today we had average hourly earnings this morning, hourly earnings year over year. That's a kind of a big kind of news event that gave us a little bit of a pop. Friends on YouTube, don't forget to smash the like button. We're live in Zoom right now. Yeah, actually, it's a Zoom call. There's no delay on it. I can't complain. Looking for that upper DD band push. S&P right here. We are breaking through some of this hedge pressure support here. Here's that bear zone tap. So it's the first big resistance. My worry is that there's that resistance we talked about right there. My worry is that we're going to hit this and then turn around and come back. SPY itself. There's a 555 is that retracement target. Like literally right on the dot. That's it right there. So just at least retracing it, at least for today, I think is the look we're going for. QQQ is a 465.8. It's the same setup. The upper target. Usually faster typing this stuff. Let's go. There it is. All right. Yeah, it's analyzed monthly map. Super quick. Let's take a read into the future. What do we got? Still nasty, crazy bear zone. That's the problem. Bear zone right here. This creepy little bear zone that's sitting above price right now, all the way through middle of October. Not good. That's why we were shorting the market all week, right? That's the problem. So keep an eye out for that. The QQQ is not in the zone yet. It's getting worse. SPY was cleaner yesterday, and getting slightly cleaner as the days go by. And let's see if SPY has forming bear zone, and it does. So SPY's bear zone is starting to get bigger. It didn't have but a couple little tiny dashes here, and now it's getting really big. So this is resistance for another wave down. So essentially my trade is to retrace this and then continue to short for a week. Okay, we all got it? Easy peasy. I'm going to bet that by next week we do retrace that. I don't think it's crazy enough for us to fall straight down from here, but we're still trading down, so there's not going to be no big bets to the upside now. Trying to long to retrace is hopefully is a decent play that we can get the retrace within a week. S&P resilience is still positive. We're at the half gap, so I still think we still hold there. Q. S&P is good and Nasdaq is bad. It's the opposite of what we had yesterday with the Nasdaq being good and the S&P is bad. Typically when the S&P is good, resilience is positive, 18.3, and it's minus 74 on Nasdaq. Typically when the S&P is, Nasdaq's the one that's moving the most. Yeah, just put some micros on this. Let's do some. Let's actually Q465 just September 11th. That's a pretty tall order. We can see. It's also the same price. Bet that. QQ at lower DD band with a DD ratio right at half. Do we hold? Or is this the day that just market just completely collapses on itself? Resilience stays above 0. I definitely went along from here. Get that DD float. Let's get Qs really quick. Oh yeah, QQ monthly hedge pressure. Let's go. I got it. So I'm gonna take a long. Oh wait, hold on. Let me think. Small long off of here. I'm gonna take QQ MHP break below. Does it still say the same? Sometimes, yeah. If DD is less than half, I usually, that doesn't really relate to MHP. I'm looking at these numbers right here. So these numbers being negative is a little scary. On the long side, it's looking pretty gross. So breaking this could be from some really nasty velocity going down. How long would it take to learn our indicators? Less than probably like a week, give or take. It's not that hard at all. On the side, there's a guide that shows you what the flow looks like. Second. Okay, so I grabbed the dip right there in MHP. I got some QQQ calls as well. One second. I get some one quickie thing I gotta do over here. Thank you. Right. Oops. MHP res is negative, right? So I still trade it, but I always trade it small. I always bet the MHP holds. This is like our new, our liquidity map. So what we do, and I'll give you guys an answer. Sorry, I was doing a little bit of thing on the side. So Isaac Fletcher, what's up, man? So we have a Zoom call that we do, and most of our members are in a Zoom call. YouTube is just like public. And by the way, YouTube friends, you smash that like button. Give us some love. The algorithm picks us up. You know, shows it to other people. These lines are basically high volume pivots. There's pressure against them. You can see that right here. If you look on my screen, right? This letter matches this. It shows me there's resistance, right? Off of this blue. And that's why we're seeing resistance off of this blue. There's also pressure towards it. So the market, like below it, wants to push and come back. A lot of times in this setup, I like to take the bet that we do break through here, but the problem is we're at the top of what's called a bear zone, and that's going to be very hard resistance, which is what we saw this morning. There's another trick that says when this number right here is greater than half, that this wants to touch that. There's another trick that says when that white number is greater than 0, that is going to be support. So while today we have resistance from here because of this guy, we have support from here because of this guy. So the market is going to have a hard time breaking this area like so as they push against each other. And as you see, it's kind of floating between the two. So when I utilize that just to make my trade plans, and I go, okay, this is the setup I'm looking at. This is how I want to trade it. That makes sense? Okay, QQQ. All right, so I basically bought retracement puts for next Wednesday for both my trades. And again, I'll take a stop if we continue to crash and sell out today and find lower lows. I'm out. If we lose MHP, I'm out on Qs. My point of no return on any bull side. Again, I'm completely bearish this market right now. He's got like dirt and crust in that, or fuzz, not crust inside a little mouse there. Betting that we at least hold this. If this yellow number less than 0 means I'm gonna bet smaller. It's a high probability that this does break. It's a higher probability. The yellow line is a tiebreaker here. The white line is a tiebreaker here at these lines. So what I do is I always buy the dip there. I always do, no matter what. Even if this is negative, I just will trade it smaller. I always take the long trade if I've got it. See, if you guys know, this is the same setup as we had yesterday in the S&P. It's the same exact move, and it didn't play out yesterday. I'm gonna take a trade on it today, though. And then if you guys go to this Discord, Isaac, check this out. Those of you that are here, come to one of our Zoom calls. You'll learn more in this Zoom call in a single day than you've learned in 20 years of trading. I promise. If you don't like it, I'll give you a refund. There it is, 20 bucks. That's all it is. We're doing a fundraiser for our trading platform that we made. We're gonna build some more stuff so you guys can check it out, I promise. This will be your favorite thing that you've ever done in trading. Okay, let's get QQQ still bouncing there. SPY. Why's trying to break? If it's the same trade as yesterday and I get bit twice, I'm gonna be sad. Doesn't breaking MHP invalidate the long? Yeah, it does. Bearing bull. So again, shorting is like whenever something is falling and breaking MHP, the one time I do take a short, I don't just jump in on the first tap. It's like, you know, it's gonna try to be bullish. Don't try to be so accurate on that. Like if it's like breaking low lows before MHP like that, I jump in. I mean, it's like, and you can take a short here with the stop like right on that first tap. Very possible as well. I just don't like to bet that the market collapses, but I will chase the short. Like if it falls through it and then retraces to it, I will jump right in. You got me? Okay. Cool. DD ratio greater than half. It's still not the most terrible setup in the world. Okay. Problem is, this is the same setup as yesterday. The S&P, I like to bet on hedge pressure breaks, but the problem is there's bear zone again. That bear zone just does not like to break that easily. Let me show you. So these bear short up setups they have bearish resistance off of this. With the S&P resilience greater than 0, though, it's going to try to hold this area. So you just get like push this way and push this way at the same time. That's the problem. Yep. QQQ is like no better here. I short with DD and resilience over 5 respectively? No, not usually. I mean, I do short, but I mean, I don't usually short like anything other than MHP taps and bear zone taps. So if the bear zone, I tap the bear zone, I'll short that. If the DD ratio is less than half. This is what we're going to watch today. QQQ, MHP. You don't want to see that lose. That's the big dog. Apparently less than half. It's not my favorite short in the world to take when the DD ratio is greater than half. So when it's less than half and it's right there, it's close enough that it can still flip bullish. So we're going to watch that. Let's actually take a look on the scanner and see if we have air side. Let's look at all the bull side, or actually bull side liquidity map, and I'll have the number that are there. That's still dropping. Let me take a look at. To me, Nvidia was like just looking So nasty. I wonder if its monthly maps have repaired themselves just yet. They haven't. Nvidia still, look at this. Nvidia has just massive volatility with another wave showing up in the middle. Interesting to see that Nvidia has illiquidity pockets and two larger. This is a cool case study. We'll talk about this one today when we do our Zoom call. You see how there's like two different regimes basically in Nvidia. You got, it's going to get wild over the next month. God, this is going to be a very crazy month. This is not flipping around and being bullish anytime soon, though. I would love, though, a technical retrace, and I would build a big-ass short again to short this down. Like, do we get another wave up? We'll see. Boy, this is not looking too hot for today. QQQ has that same crisscrossy look to it. QQQ also a lower DD band right here. So this is a... Yeah, unfortunately, I think this is still going to come down today. But we'll see. SPY resilience still greater than half, which is showing that gap power on the S&P. So I still think we're there, but we'll see. Yeah, NQ's attempting to do that. Signs aren't looking good. My bet is by next week, so I'm in no hurry to get there today. The retrace that I'm looking for, but if it starts collapsing today, I might reformulate my position. So right here, you have your, let me just make this bigger. So there's going to be some support from here, but man, this is just bad. If it breaks here and does that and then back up, that's something it can do. Does the market just collapse out today? I would say that I'll let, because VIX is above triple B, there's going to be some overshoot. The event today, we had some moves like this. This is internal to that range. If this does fall out and come right back in, this is the signal. Go. So the problem is like right out the door, I feel like this could actually fall down a little bit lower. Yeah. As that MHP turns to resistance, you might get a little tiny bit of a blast down. Not sure if I like it as much anymore. Yeah, things are still looking kind of bad. None of the signals are looking that strong anymore for today. But so 455.5, 456.5 is kind of like my point of no return here. Right about here. One strike lower. YouTube, hit that thumbs up button. Chop chop. We're going to get some movement in about 3 minutes on the 9 o'clock candle. Question is, What do I think? Okay, futures really quick. And the Nasdaq candle is just looking really garbage. All right, there's the S&P support. That's basically the last one on futures right here. Question is, do we just collapse today? You have VIX is hitting one resistance, so this is your last. This is the last hope for the market to not collapse today. There is to be any kind of turnaround. Your last little spike, your little bear trap. So if this breaks here, this is very bad, very bad. Not on VIX hedge pressure break. So we could do this, and the stock market will just collapse. So be very careful. So keep in mind, this could explode the market. This is the same exact setup as yesterday. That is pretty bad. I honestly would love to short off of that technical retrace off of that. Not necessarily just like shorting randomly on this, but I'd love to get that pop up and short it right back down. That's what I'm looking for a lot of these. I'd love physically to be short from a little higher high instead of chasing this, but this is actually pretty bad. So this is not good. Everything's kind of crashing out today. Boo. I think he's almost at its little red line here. Yeah. Let's find it. The guy. That's what I was looking for. Last resort is this. Joe C, which report? The sentiment from jobs? Oh, from the jobs report from yesterday? Which one? Are you talking about, oh, sorry, the non-farm report. I'm reading that wrong. Sorry. A little zoom. The unemployment rate is it ticked down from last time though, from a 4.3 to a 4.2%. Still slightly higher. Payrolls are decent. They missed the forecast. They're still kind of low, but an economic slowdown more so like I still interpret it as we're not we were on a hiring spree and people got back to work, but right now it's just it's a hiring slowdown. I don't perceive it as an economic slowdown. I perceive it as a hiring slowdown. There's just delayed effects because of the inflation that we had. People were not getting these jobs that were available because they weren't paying them enough. After COVID, right? This is my thought on this. There's a lot of bear sentiment out there. Now there's bearishness to October. Don't get me wrong, guys. If we retrace to this level that I want to retrace to, that I keep showing you guys, I'm going to build a huge short for like the next 2 weeks. Here's the thing. Joe is correct, like in Zoom chat. There's a hiring slowdown, and it's gonna like there's delayed effects. Like after COVID, nobody was working and companies opened back up and companies needed employees. So the power was in the employee, the one person that's like, I'm here ready to work, ready to risk my life. But you're going to pay me double because you need a worker and I'm the only available forklift operator in the city. And there's 10 other people wanting me to come work for them. So you're going to pay me more. And that's what started the waves of inflation, right? So companies had to, cost of labor went up. So the cost of the things they sold had to go up to cover it. And that's what happens when you, and it's funny that when they shut down, the funniest part is when they decided to shut down everything. I was on YouTube that day, right? The day before, when I got a phone call from a friend that knew something, and it was like, Trump's gonna shut everything down this week. And I was like, oh, how do you know? Like, well, I know somebody that knows somebody knows somebody. They're gonna shut down every business out there. I was like, this is bad. This is bad for the economy. Very bad. This is going to cause a period of hyperinflation that's going to take half a decade, if not a decade, to recover from. What happens when you shut down every business and everybody goes home on a pandemic, the first people that come back can ask for ridiculous salaries because companies are desperate to get them up. And that's just going to bake into the price of things they sold. And that's the inflation we experienced. And that inflation doesn't go away with what the Fed does. And this is where everybody on Wall Street that's talking about the Fed didn't raise, they kept rates too high for too long. The Fed lowering interest rate will do nothing for that inflation. It's cost push inflation. Fed can slow down hypereconomic activity. They can't change a supply and demand imbalance with interest rates. And so most of Wall Street is getting that wrong. The Fed lowering rates would only stimulate Wall Street and the stock market. It'll turn people bullish in the stock market. It won't change inflation, not this kind of inflation. So my belief on this is that a lot of people are saying it's talking point. There's all these threads on there. Oh, the Fed is keeping rates too high for too long. It's not the Fed that has control there. The only thing, and this is what Jay Powell tells you every time he has a press conference, he's like, the labor market is all we're looking at. That's it. You need the cost of labor to come down so that companies are willing to create jobs and hire people again. The cost of labor is still too high. In COVID, people are getting like double their salary to sit at home and do a Zoom call. Their productivity was very low and their salary was very high. And we're just feeling the effects of that now. It takes years for that to unwind. People, when you build something, it might take some time to ship the raw materials and some time to build it, then to ship it to the wholesaler, then to ship it to the retail outlet, then it sits on the shelf, and eventually someone buys it. During that lag time, you're going to have this period where your labor cost is baked into that thing. And then 6 months later or 3 months later, or however long it took for you to put in the purchase order for raw materials and it hit the shelf in retail, somebody decides to go to buy it, they're less likely to buy it many months later because of what you did now. So there's like this, people are less likely to buy something many months later. We're in that boat now. And it's because prices were high back then. So these people don't want to buy something because the price is too high. So what do they need to combat that? They need a higher salary. The problem is the companies right now, there's an abundance of unemployed people, as you see the unemployment rate at 4.2. There's an abundance of people now instead of a shortage of people, which means the companies now can actually have the power to pay lower salaries instead of being desperate for somebody to pay a higher salary. So because of that, there's enough workers. The company's like, I'm not going to pay you guys more. And the people were like, well, we need more money to afford the stuff that's being sold out there. And there's a standstill in the labor market that way. There's an abundance of available workers now. Jolts are coming down because companies are filling up the jobs that they already had open, but they're not opening new jobs because the salaries are too high. It's going to cost too much money. So the only way that this fixes itself, and I've been saying this for years, the only way this fixes itself is that people become desperate enough that they're going to take whatever job that's offered to them at whatever salary. Imagine you made 100K being something at a job. You got laid off. And then during the Zoom call era of COVID, you got a phone call down the road. Somebody said, hey, we need some people now to do what you do. You made 100K, great. We'll pay you 150, and we'll give you a 30K sign-in bonus. Only if you can start tomorrow, though. People are like, amazing. I get this amazing job. And everybody did company switch to get these amazing salaries. Then they started getting laid off after the COVID stuff reset. And so we saw those layoffs, right? Those 4 waves of layoffs in 2021, 2022. We had a recession based off of that. And then now these people jumped into like crazy high mortgages. And they bought all this stuff with the high interest rates. And now they can't afford the shit that they have. And so they're like, I need my job back at that awesome $150,000 salary with the $130 sign-on bonus. And companies are like, no, that was COVID salaries. We won't do that anymore. You used to make 100K. We'll probably give you 100. Actually, we're going to give you 90 because there's 1 million people that are unemployed that need a job that'll take less. The person's like, well, I don't want to make less. I've got bills to pay. And so the standstill is, as long as you wait long enough, people's desperation takes over, and then they'll finally take the job at the lower salary. The problem is that they have a lower salary, so commerce will slow down. They can't afford to buy the things as quickly as they could. They're behind on their bills. More interest rates are high. The cost of borrowing money is high. So they can't even get credit cards easily to survive. So there's this weird hole we dug ourselves in that the Fed cannot solve with interest rates. They can't speed up or slow down the credit markets and the borrowing markets to that avail. The only way that people get out of the hole, a couple ways, is that the lending market, it becomes cheaper to borrow money. That's one of the ways to do it. Like banks lower their risk model, make it easier to get a loan, yada yada. The housing prices come down. The problem, the housing prices aren't going to come down. That's my theory on that. So people are kind of stuck needing more money, and companies are stuck not wanting to pay more money. Who usually wins that role? Well, if unemployment is becoming higher and higher and higher, we're going to enter a second recession. GDP is already going to be lowered because people the dollars aren't stretching as far. You have lowering GDP, like your quarter over quarter GDP is negative, and you have unemployment going up. That's what I call recession signs. The only 2 recession signs you need. Don't listen to yield curve inversion stuff. Those are signs, but in reality, you're 100% convinced you're in a recession when your GDP is down, your unemployment's going up. Because you need one to boost the other. If they're both going down, it becomes a cycle you can't get out. Because this is what I'm trying to explain right now. GDP is going to be down, and unemployment's still slightly high. Now, the issue is the company's going to have to bite the bullet and start paying people more money. That's the way out of this. Are the companies desperate to hire people right now? Maybe not. Will prices naturally go down on their own? They absolutely will because of competition. But that takes a long time. As long as the Fed holds the fort, which is what they're betting on doing, the prices of things will naturally come down because that delayed effect comes down. As the COVID rate, you paid people like double their salary, and then like years later, you're hiring people back at less of a salary. The cost to make that thing is less, but that doesn't hit the shelves until many months later. So as you see unemployment jolts are going down, it's because people are getting hired, but at lower salaries. So the shit they made is still on the shelf from 6 months ago at a higher price. As time goes by, that price is going to slowly start to come down. A couple things, because demand for that product is down at that price, but also because people have this fixed amount of money to spend. The other thing is that the cost of making that thing has gone down, but like months prior. So we're just in that delayed effect where the cost of stuff is still high from the last time when it was made, and that's where we are. So the question is, does the economy just collapse from here? Or is it good enough that people are gonna feel okay? I think that it's good enough that we're gonna survive. The Fed wanted a soft landing, which means they didn't want to go out there and prop up the market again, like they did in 2010, 2011, because they can trick the stock market, which is what they've done. The razor sharp bull run that we've had, it was the Fed tricking the stock market, raising rates, and then stopping rate raises. Tricked the stock market, and the stock market went to all-time highs. Problem is the economy didn't swoop up as fast. So we're just getting waves down, and we're going to get waves down through October. There's no doubt in my mind that we're going to get that. We get a sell-off, it's rocket fuel for a larger runoff. Yeah, like I think middle of October, we base out before the election, and we continue to rally. I think that's kind of what the monthly maps are showing too. Productivity unaffected. Let me look at those numbers. I can't. Where are they at? So the problem is that it's just a slow recovery. Things are getting slightly better. Like I'm one of the few people to see jolts coming down as a sign of, not a sign of doom and gloom. I see that as a sign of stagnation. Available jobs are slowly getting filled as people are like, fine, I'll take the job, but the salary sucks, but hey, I'll hold on to it till I get something better. That's like where the state of the market is right now. Unemployed folks are not unemployed because they're not capable of doing the work. They're unemployed because they got laid off, and they're shopping for jobs, and they can't get the salary they want because they can't afford their bills and their normal salary anymore. It's because humans went out and bought houses at twice the price because we're a bunch of fucking idiots. Like overnight, oh, I got this crazy awesome salary during COVID. Now I can afford the house that I want. Well, the house that I want is now 60% more expensive. Whatever, I'll buy it. Things can only go up from here. And then people dug themselves into a hole like that. The interesting thing is that the demand for houses and new building is still up. And so demand being up, the housing prices aren't going to come down anytime soon. So people are like hoping like, man, I'll refi this house or whatever. Interest rates not necessarily changing. The value of the house is going up, staying high. And, you know, people are stuck for like, and I said whenever I knew that, you know, I heard that Trump was going to shut everything down, I said we're gonna have a period of possible hyperinflation for like 5 to 10 years, and that was 4 years ago, and we're still experiencing it. I saw the spaghetti bowl. I go, you can't. I said people are gonna get laid off, and they're gonna come back at ridiculous salaries. Like the one maverick that's like, I ain't scared of this COVID thing. This thing is a hoax and all that stuff. You know, people like that. I'll go work, and then you get those people who are like, you know, basically walking up to the employer and say, you're gonna pay me double because you need me more than I need you. And I was like, I was saying, just you wait. You're gonna see, like, you know, I always like to use my pizza driver as an example because when I was in college, I used to deliver pizzas. And so you're gonna see guys at Domino's making $50 an hour. You know, that was kind of my was my example I was giving. This is just not looking hot today, guys. Ad market is bad. Promises of realtors too about interest rates coming down a year ago. Oh God, I had one realtor I work with. Bless her heart. She's awesome, but they, you know, they're not traders and they don't pay attention to the stock market. Yeah, they say the same thing. She actually is pretty smart though. She's the one that told me, she's like, housing prices aren't going to come down. They're going to keep going up. But she wasn't saying that in like a pushy way to get me to buy a house. Like, you need to get in now. She was like really smart about the comps. She's like, She's like, I don't foresee the housing prices coming down 10%. They're gonna stay high. She's like, because there's just demand. She's like, even with the prices high as they are, I'm showing more houses now than I ever did. I was like, yeah, one of my closer friends is a real estate agent. She's my no nonsense go to. That's why I like to talk to her. Dude, this market, bad market. So if this gets back above here, I'll be excited to take more of like a longer big bet. All I want to do is retrace this. That's the problem. There's no supply of houses. It's impossible to find a house. Like we're looking right now. It's like you just can't find. You can't find anything good. I'm watching the VIX right now. That's all I'm watching. So I want to see what the volatility is going to do from here. If that VIX starts to collapse out, we're going to stabilize. I'm still on the cusp of, and again, I'm not day trading this. I've got calls for next week. So all I'm going to do is debate on if I want to close out or get some more. So as a swing trade, I'm not necessarily concerned with MHP breaking today other than I can get the trade I want much cheaper and I can get it further out in time. But I'm watching VIX today to give me a telltale sign that the market's going to sell off and crash. If VIX drops below 27.5 like it's doing right now, we're gonna recover. So I'm not too scared. VIX is hitting a very key. This bear long down on VIX is very it's like my fingers are crossed on this one. If the VIX continues to go higher, it's still the problem that I face right now is that the VIX could do this today. So that means that the S&P and the Nasdaq can just collapse out with like a nasty fucking V before it goes, and that's my problem. That I don't think we're gonna slowly recover from here. Well, the S&P, all the S&P signals started turning bad right now. So right now I've just been watching VIX like try to work its way lower. So yeah, I don't know. MHP break, I always chase the short to the short side. So I'm kind of concerned with this one. With all signs looking bad. My trade is for next week though. So I'd like to build a position in a very low spot. Yeah, the S&P don't want to let it go yet. This is just like 3 days in a row we've had trading just like this. You have some really strong support right here, which is good. That impact red line is supporting. Again, all I want to do is see this touch by next Friday. That's all I care about. Problem is if we start falling through here, there's going to be another red line here that's going to be my target for the retrace. So if we don't get it today, I'm probably going to close it out. Sorry, if we don't get, sorry, if we start to fall lower lows today, if today we close below here, I'm not gonna keep this trade. Because what'll happen is if it continues to fall lower and lower, then you get 2 retracement targets. There's like that one, and then I'm not gonna trade 2 levels up. I'll aim for this one wherever support I find. Watching the market deteriorate today is heartbreaking on these non-farms. So and I'm watching VIX to see if the VIX is just getting like nasty and getting worse. There's some strong support here. We've had the same trade setup 3 days in a row. It's been interesting, especially on the S&P. There's the NASDAQ at a clean support. There's the S&P at DD band support. And how I build the zones? Which ones? So this is like my Thinkorswim has like the history of all my levels, right? That we use them all different times, different places. The blue are the overnight dynamic pressure. So this is like, you know, weeklies and monthlies. These are older, longer term pivots. And this is just there for reference. So like in a trading day, what I'll do is you might see like a shit ton of lines on my chart, but I'm just looking at what's internal to today. We have the orange and the blues every single night. Now what do we do when we get here? That's the next question. So the DD ratio collapsing is that's the problem. That's like with the long trade, it's just losing any hope for me. Usually you'll get good support there, a DD greater than half. Oops, greater than half. Problem is the ratio is less than half. So my confidence is like no confidence at all for a bounce. That's the problem I'm having right now. There's that final little tap there. So when I said that we get like a quickie little dip and then VIX will hit its bear zone, that's what we're looking at right now. There's that. So when I drew earlier, I think it's draw right here. Or wherever I drew it. VIX right here. So this is that run. Yeah. Let's do some impacts real quick. Dude, every sign today is just garbage. Market is pretty scary today. What's good news? The new Beetlejuice movie just came out. It's expected to do 100 million at the box office. That's exciting to me. See, like, my Gen Z significant other, I was like, oh my god, Beetlejuice is coming out. She's like, that's Beetlejuice. I'm like, where were you in the 80s? She's like, I wasn't born yet. Like, oh my god. Beetlejuice is a whole phenomenon. There was a cartoon. There was like a... Oh, Beetlejuice is great. Oh yeah, that's going to continue to... Wow, okay. Here is that volatility. Wow, that's like... This is price level 10. Oh, there's a gap fill on... There's a gap fill on SPY. No, yeah, there's a gap fill right here. We mark all of our gap fills here. QQQ is right in the ballpark as well. There we are today. Yeah, market never forgets about flash crashes. That's what I told you guys last week. We drew this. Let me show you what I drew. Hold on. Being very careful here. I still want to wiggle myself into a long for the next week or two. The market's... I'm not being excited about a big breakout, but yeah, no, you guys remember I drew this like a long time ago. I'm always really good at this. This was like, when was this? Back in early August or mid-August, right? We're right here. I said we're gonna go up here and then drop right back down to the middle. S&P, this would be like the 5,500 level. Through September, 5,500 level. That's like nailed it, right? And there it is. Oh, we're there right now. There it is. 5,500 level. Was I trading futures in 2010? I was not. I was trading stocks in 2010. That was when I first started trading. So just to kind of reiterate the drawing that I made. Let's just clean this up. Again, this is not my trading chart that I use. This is just my education chart. I keep all my lines on here. That's why it's a little messy. A blank one. I didn't do too terribly bad. Actually, this is futures. Let me go back to my stock one. How'd I do? So this is my drawing from last week. I'm probably going to be feeling some heat today, but I'm not too, and I revised it just to show more of like the waves without going too detailed into like furthering beyond October. But essentially, I drew like we'd have waves and then end of the month, and waves end of the month. Then we would be here, then here. That's what I drew. So my first drawing might have actually been more right. I put this up on August the 19th. Right, back to rallying. I mean, back to when we were rallying, right off of this. Markets don't forget flash crashes. They try to make their way to lower lows. The problem is how slow do they go, right? This one's moving a lot faster than I thought. Be rushing to fill that gap. Here it is. So the Spider said it's gap fill right now, and QQQ is trying to get there. There's that first bounce that you'll probably see if you see anything at all. Boy, we might just overshoot that so Nasdaq can fill its gap. $543.73. Man. Pay for the weekend crawfish meal on that dip. Ooh, very nice. I know, if markets never forget about flash crashes. That's my saying. Yeah, this is Essex still has a little bit of room to go too. That's where the bad part happens. So Nasdaq continue to fall. Same setup as yesterday too. Unit back over here by today. Be right back. I'm gonna take a quick little restroom break here. Just marking that S&P gap fill just to have it. The volatility is not doing anything else either. On the good side, VIX is kind of looking kind of booty. Picking up into a second bull zone doesn't look so hot. There's just a lack of any buying flow here today. Problem is how far do I think the low goes on the bigger chart? Like, I don't think we get any kind of reversal today. I'll be completely dumbfounded if we get a reversal today. The market has plenty of room to fall to the downside without hitting any kind of support. Nasdaq's got these yellow lines here. There's nothing to pivot off of. It's got a little bit, like a lot more room to move. Ratio 0.3. Damn, that is just ridiculous. The 5450 future support right here. This is the one. It looks like it's about to just stomp all over that. That's like on its own gap fill here. Oh, I got a meeting. Shoot, I totally forgot about it. At 11. Oh, okay, good. So I got an hour to prepare. I got a pitch meeting. That's exciting. Gap fill is basically it. I mean, that's really the only pivot that's in the vicinity that's worth even considering. Like, this is just a really disgusting day today. Let's take a look here. 11. All right, so this is going to be my entry point for next week right here. I'm now starting to get my calls for next week. I waited for that QQQ dip. If we lose this, then I don't know what I'm going to do. But like, I'll probably just close everything out. I don't know what I'm going to do on the long side. I don't think I'll take it for a little bit. But if this holds by today, then I'm pretty good for my targets. My targets are very, very light. They're not that aggressive. Again, as long as we close above here for today, I'm good for that for next Friday. That's what I'm waiting for. We'll see. No, no thesis other than just the idea that the market doesn't just fall straight down. You typically, this one is that there's enough bullish pressure that I'm hoping that it wiggles down. Like, essentially, like, you see how it's doing this, that it still does this. Well, the problem is I don't think we're going to get my retracement target. On my full retrace. That's the one thing I don't think we're going to get. I think the velocity is too much to bet that we get that. $555. Oh, we'll see. As long as we close above 545, I'll at least get some delta on it. I may not strike in the money, but I'll get some delta on it as long as we close up here. So that's the problem. I'm a little concerned with this one particular level. I'm literally doing something super risky right now. I wouldn't recommend catching a falling knife. There is no support though on this one. I got to prep for my pitch event, which is at a bar tonight. It's an event in Houston. They closed down this bar, and it's like an entrepreneur pitch event. So I've been going to every event I can, just talking about the company and talking about the marketplace. It's been an exciting, exciting time for like me to be able to do stuff like this. I was asked to pitch for a TV show. I can't tell you about what it is yet, but I'll tell you later. And today's the second round, so I might get to be on a TV show. That's at 11, so I got like an hour for that. Probably gonna go like fix my hair and like a little nicer. Sounds like Shark Tank. Similar, yeah. $5.44. There's that yellow line on Qs as well. That's a support. S&P is very close to its support. Man, it's like Wall Street's really responding. And monthly maps was on point. Like as the market was trading higher, we were calling the market was coming down. Like that's how great monthly maps are at seeing that. The magnitude of how far it comes down though is always hard to predict. It's hard to predict how far market's going to move. Greg will like Shark Tank. Wonder because you love Shark Tank, you find impossible investments or ideas for yourself. Oh yeah, Shark Tank is such a fun show to watch. I watch it usually like as my go-to every day if I need a show just to put on background noise. I love watching Shark Tank. Oh yeah. You can get any kind of bounce here at all. The market is not catching a bid at all here. Hey. $54.30. That's about 7 points lower. The Nasdaq filled its gap and it's continuing to go. Jeez, this is just brutal. All right, you guys, I got to run out of here in about 5 minutes, but we'll be back for the Zoom call at 3 o'clock. Don't forget to go over to Rocket Scooter's Discord. Link in the description below. Here it is. Hold on. I'll catch y'all later. Wish me luck on my pitch event. Don't forget, we have our Zoom call 20 days profitability mindset courses talking about if you can survive 20 days in the market, you probably are almost there. There's a few things you need to change about yourself and how you bet in the market. This is what we teach. It's 20. The motif of it being 20 days. It's a 20-day webinar series. We're in the middle. You can watch right actually at the beginning. We're 5 courses in. You can watch the old videos. It's only $20. Go to the link. I'll post it really quick. And $20. If you hate it, definitely give me your money back. But you're not gonna hate it. You're gonna love it. I promise. We'll teach you betting strategies, probabilistic edge, and all kind of fun things that you didn't think existed in the stock market. Ways for you to reformulate your betting strategy. It's not just about picking up or picking down in the market. It's about knowing how to bet based on the hands you're dealt. And what are the odds of the bets you're taking? Are they high odds, low odds? You add to your position, you get out of your position. How do you know when you're wrong? Things like that. We cover all of that. Check it out. All right, we'll see you guys later. Thank you.